Good morning, everybody. Welcome to our FinTech and Digitalisation update. We're going to brief you today from all of the members of our team in the FinTech and Digitalisation group at ICMA on all the work that we cover in this area. Just to mention before we start, from a housekeeping perspective, this call is being recorded and we will share the recording with all those that registered for the webinar, whether you were able to attend or not, after the session today. We're going to take about an hour to go through our activities, and all of the different people on the team will present on the different topics that they are working on. We are hoping to leave a little time at the end for Q&A. So if you would like to raise your questions as we go through on the Q&A topic, please do and raise a question of any kind and we will endeavour to answer them. If we don't have time to do that during the call today, we will send the answers to you in due course. So without further ado, we will start our content. Thank you. So this is the agenda we're going to go through today. We're going to have a brief overview of ICMA, but hopefully most of you on the call will know a bit about ICMA more generally. I will then introduce the team who are all on the call today, the governance structure around our work, and we will do a short focus on our work in Asia Pacific. We'll then do a bit of a deeper dive into the topic of digital bonds and cash on chain, which has been a priority topic for ICMA for the last 9 years or so. And then we will touch on our work on AI, which is a slightly more recent topic that we've been working on for the last 2 years. Important for the work that we do at ICMA are the models and standards that we build. So we will spend some time talking about those too. We have also this year, over the last 12 months, initiated a very important project called the Primary Market Innovation Project that we will discuss. We work also on the intersection between sustainable finance and fintech and digitalisation, and we will touch on the task force that we set up in that area. And finally, I will go through some information on our events and education offering. So ICMA, just a brief overview, we are the global trade association for the debt capital markets or fixed income markets. We operate on a not-for-profit basis with our headquarters in Zurich, but we have offices in London, Paris, Brussels and Hong Kong. And you'll be hearing from colleagues, all of whom are based in London, and one of our colleagues in Hong Kong who has been in touch with many of you over the past year or two with information on our fintech and digitalisation work. We have around 630 member companies and they operate across 71 jurisdictions on a global basis. And they cover the entire ecosystem of the debt capital markets, the private and public sector, issuers, banks, asset managers, securities dealers, solution providers, law firms, and central banks. We also obviously have very important relationships with the regulators who, whilst not members of ICMA, we work with on a regular basis on all of our topics. As I mentioned, our standards are a vital and important part of what we do here at ICMA, and many of the ones listed in these bullets here you will be familiar with, but we also have some that relate to fintech and digitalisation that we'll be touching upon in the webinar today. We provide a lot of networking opportunities, and obviously our main raison d'etre is to work on behalf of our members on topics that are important to them, in particular topics that require the whole industry to collaborate together, for example, DLT. Thank you, Fee. Thank you. Okay, so just briefly touching on our priorities. This is the priorities for the FinTech and Digitalisation team, and important to mention that ICMA is structured along its 3 vertical pillars of the primary market, the secondary market, and the repo and collateral market. And across the bottom, as a cross-cutting theme, is the FinTech and Digitalisation topic, and also our sustainable finance topic that I briefly touched on earlier. So these are our priorities for FinTech and Digitalisation. Firstly, articulating and monitoring the themes that are driving the digitalisation and automation of our industry. So I've mentioned DLT, I've mentioned AI, I've mentioned the intersection between sustainable finance and also primary market innovation. So those are 4 or 5 areas in which we are very focused at the moment. The central pillar here is all about our regulatory advocacy work. And in our team, we focus on the regulatory advocacy relating specifically to the topics that I've just mentioned. Clearly, there is a wider function in ICMA that does regulatory advocacy across the traditional financial market in the vertical pillars that I mentioned, but we liaise very closely with that team. Delivery of models and standards is also a very important area. Sometimes we work on frameworks, and we'll talk about these later, relating to DLT in particular and Project Guardian that is based in the region in Asia. But we also have other models and standards that are aimed to be used globally, and we spend a lot of time promoting those to our members. So just touching on our governance structure and how we collaborate with the many, many other ICMA committees and working groups. This is just an illustrative diagram. We are overseen by our Fintech Advisory Committee, otherwise known as FINAC, which is a select member of firms that oversee and guide, govern and prioritise the work on which we focus. The team I will touch on in a minute, but we do a lot of engagement with our other colleagues across ICMA, of course. So looking at the working groups along the bottom, some of these you will be familiar with and or involved in, and it's important to state that any member of ICMA is able to join any of these working groups. So we have the CDM, which is one of our models working group, the bond data taxonomy, another of our models and standards, which has its own working group, the DLT bonds working group, which works in partnership with Project Guardian, the fixed income workstream, which we also run on behalf of the MAS. And we have the AI and capital markets working group. In the secondary market space, we have another working group that isn't run directly by our team, but is run by our secondary markets team, which focuses on automation and standardization and electronification of the secondary market, which is the electronic trading working group that we co-sponsor. So just touching briefly on the Fintech Advisory Committee, as I mentioned, it governs and oversees all of the work that we do. It was set up in 2019, so only 2 years after we set up the Fintech and Digitalisation team at ICMA. We have very specific mandates to support market stability whilst also encouraging the automation and digitalisation and the adoption of new and transformative technologies, but not destabilising the industry as we do so. So we play a very important honest broker role between ourselves, the regulators, and the industry. This committee is co-chaired by two of our members, Emma Lovett from JP Morgan on the sell side, and Justin Chan, who's from BlackRock on the buy side. So we have a good co-chair structure overseeing the work that we do. Next slide, please. Okay, so just touching briefly on the team, and then I will move on and hand on to some of my colleagues. As mentioned, I run the Fintech and Digitalisation team globally. Gabriel Carlson, who is on the screen, is my second in command and has been running this team and working on these topics basically since the function was established. We then have a consultant, Tom Healy, in New York. We also have a second consultant, Armin, who I apologise, it's not on this slide, but that's because Armin, unfortunately, is leaving us soon, so won't be part of the team going forward. However, he will talk to you about the primary market innovation project that he's been running. Francisco is one of our two associate directors in the team, and Emma, another. Emma focuses mostly on AI, and Francisco is doing a lot of work on DLT and stablecoins. And then in Asia, my colleague Mushtaq, who is the managing director and head of the Asia Pacific team, works very closely with Alex Tang, who not only supports us as part of his day job, but has a wider role supporting all of ICMA's activities in the region. So that's quickly touching on our team. Right, Alex, I'm going to hand to you now to focus in a little bit more on our current and future Asia Pacific specific initiatives. That was very hard to say. Thank you, Alex.
Good afternoon, everyone, and thanks so much for taking the time to join in this webinar. What I would like to achieve here today is to quickly recap our current Asian strategy towards fintech and digitalization, and then outline what we aspire to do in the near future to further support growth in a more strategic way. On the left-hand side of the slide, this table captures our existing APAC strategy towards fintech and digitalization. This is comprised of both maintaining regular daily touch points with the market, complemented by our collaboration with the official sector. So just as a high-level recap, there are four main daily touch points that we maintain here in APAC. So first, we organize our own ICMA FinTech events in the region. So this have included side events during the Singapore FinTech Festival and also the Hong Kong FinTech Week over the last 2 years. We will continue to do so this year, including through a roundtable format in Hong Kong. Second, we take on speaker roles at relevant industry events. So this includes our speaking role at the Open Data Standard Forum, hosted by Bloomberg back in March, as well as upcoming speaking role at the Wiki Finance Expo in July. Third, of course, we maintain regular dialogue with the industry through bilateral meetings. And last but not least, we distribute the global fintech newsletter to our Asian distribution list, which now includes more than 500 contacts, and the list is being kept updated. So having quickly run through our daily touch points, what is important to highlight is that these daily touch points are complemented by a more strategic pillar, so which is our collaboration with leading financial regulators in the region on strategic projects. So in Hong Kong, we partner with the Hong Kong ICMA to incorporate the bond data taxonomy into the issuance structure of the two tokenized green bonds issued by the Hong Kong SAR government. In Singapore, ICMA is leading the fixed income work stream of Project Guardian, which is led by the Monetary Authority of Singapore. So with the current strategy landscape in mind, so in order to deepen our current initiative and engagement in the region, there are actually three key visions that we have laid out and would like to further pursue in the near future, as captured in the table on the right-hand side. So firstly, we are open to more official sector collaboration. So this means not only deepening our existing collaboration with the Hong Kong MA and MAS, but also being open-minded to new collaboration opportunities with other Asian financial regulators. But of course, given our resource constraint, we may not be able to reach out directly to all Asian financial regulators. So this is exactly why we are hosting a webinar like today in Asia friendly time zones to provide ICMA members and non-members who are interested in our work with a more holistic update on our global fintech initiative, as well as where we are heading over the next 6 months. So the aim is to provide a high-level framework for our Asian constituency to think about and to help identify at an early stage the specific topics that may be worthwhile exploring in collaboration with ICMA. Last but not least, by increasing the visibility of our global fintech and digitalization initiative in APAC, by walking through our global work structurally, ICMA members based in Asia can have a better understanding of what is relevant to them at a committee level. And hopefully, this will lead to a higher level of participation from Asian members in our committee work. So just to conclude, as we set out and pursue these new visions, all of this is enabled by our global fintech team here with cross-topic expertise. So our role in Asia in many ways is to act as a connector by putting in the right mechanism so that meaningful two-way exchanges can take place between APAC constituency and our global fintech and digitalization experts. So with that, I would like to pass to Gabriel and Francisco to walk us through our DLT-related initiative. Thank you.
So looking at our DLT bonds working group, so fostering the development of digital or DLT-based bond markets is a strategic priority for ICMA. And we set up this working group back in 2022, bringing together over 300 individuals from over 150 ICMA member firms. So across the value chain and bring together a diverse set of participants from issuers, investors, banks, market infrastructures, law firms, central banks, data and technology providers. And it is, in fact, one of the most diverse committees at ICMA, which is open to all members. And I'm aware that we already have a number of members from the APAC region, but we are very keen to for members to engage and join us here for this committee. And essentially, the working group focuses on four things. One is to provide market guidance. The other is to foster discussion on how to support liquidity and promote common standards, but also collaborate with the public sector, central banks, and regulators to scale tokenized bond markets, but importantly, safely, in a safe manner. And we also educate market stakeholders, so through presentations in the working group meeting, etc. Moving on to the next slide. So to give you an example of the output and the deliverables of the DLT bonds working group, we started off back in 2022 with a set of FAQs to understand what does DLT and blockchain mean in bond markets, addressing some specific questions in relation to the issuance, what it means for legal documentation. Then in 2023, we looked at all the legal documentation of tokenized or DLT-based bonds that have been issued to identify some commonalities when it comes to risk factors and disclosure. And then in 2024, we issued a reference guide, which has been widely used and which is the product of a collaboration between market stakeholders within the working group to cover essentially all the key points that any organization that is either issuing DLT-based securities or that is investing in DLT-based securities as providing services would have to consider, from legal aspects to operational aspects, to specific buy-side considerations, how to, for example, value a DLT-based security, and so on. Then in 2024, if we move to the next slide, we joined Project Guardian. Okay, this is our roadmap. So to pick up on this, supporting market readiness is certainly one of the key points of our working group. There are some specific aspects that I will pull out and come back to under Project Guardian. But this is essentially just a snapshot here of the different items on our roadmap for 2026. And on the topic of readiness, DLT readiness, it is worth mentioning that we will be holding a webinar on tokenization and DLT readiness on the 7th of July. So that's Tuesday next week, to address all the key questions that one has to consider and how to get ready in light of wholesale CBDC developments, but also in light of the rise of stablecoins and tokenized deposits. Buy-side engagement is another topic that we focus on, and that's been addressed in Project Guardian, which I'll come back to very briefly. But we also look very much at the kind of cash on chain question, since this is a critical element to scale DLT-based bond markets. Then, as mentioned, we will cover standards and harmonization separately under the bond data taxonomy in particular, and the collaboration already has been alluded to. So now moving on to Project Guardian. And as many of you will be aware already, we have been engaging with the Monetary Authority on Project Guardian, which is essentially an initiative that seeks to enhance liquidity in the financial system through asset tokenization. So it's a global initiative convened by the Monetary Authority of Singapore. We contributed to this back in 2024, in particular with our work on standards and the bond data taxonomy, amongst other aspects. And then last year, we were appointed to lead the fixed income workstream with a number of participant firms from the APAC region, of course. And we released in November last year during the Singapore Fintech Festival 2 reports, a DVP settlement guide for DLT-based debt securities and lessons learned from custody arrangements for DLT-based debt securities. And these two aspects continue to be important ones for the working group. For the work stream, the focus this year is more on the implementation, on going live implementations of the bond data taxonomy, being two focus areas here. That being said, we have, on the back of the work that we have done here, we have delved more into stablecoins to understand the ins and outs and the suitability of stablecoins in a capital markets context. So while we have drawn a comparison between different settlement assets in the fixed income framework, we have also looked at this topic more closely. And for this, I will hand over to my colleague, Francisco Parente.
Many thanks, Gabriel. Good afternoon, all. Our current work on stablecoins and other settlement assets follows, as mentioned by Gabriel, from the DVP settlement guide published in November last year as an addendum to the Guardian Fixed Income Framework. On 20 January this year, we published a paper discussing the regulatory developments and potential role of stablecoins in the capital markets. When we're discussing them, stablecoins are essentially digital representations of value designed to maintain a stable value, most often via reference to an asset or basket of assets. In the article, and of most relevance to the capital markets, the focus is placed on fiat-backed stablecoins, which are those that reference one or more fiat currencies only. The article then looks through some of the regulatory frameworks that have been developed or are developing surrounding stablecoins. Particularly, it looks at the US, EU, UK, Singapore, Hong Kong, and Japan. As these major jurisdictions develop and put in place legislation, some points of convergence have emerged. Fragmentation, however, remains as one of the central risks with the technology. The article also discusses the potential use case for stablecoins as a settlement asset, with its advantages, limitations, and especially additional regulatory constraints when compared to wholesale CBDC especially, but also tokenized deposits. In March 2026, we then had a webinar, along with Euroclear and Standard Chartered, further discussing the potential of stablecoins in the capital markets. This webinar is available for viewing in the ICMA website in the DLT Bonds Working Group webpage. It is important to stress that we do not look at stablecoins in isolation or consider them to be an ideal solution. Instead, we look at them only as a potential settlement asset, along with tokenized deposits, or also called tokenized bank liabilities for Project Guardian, and especially wholesale CBDCs. We will continue to engage in the use of these settlement assets within the capital markets through the DLT Bonds Working Group. And now over to Emma to present on our AI and capital markets working group.
Thank you, Francisco. Hello, everyone. I'm Emma in the Fintech and Digitalisation team, and as part of my role, I'm also the Secretariat to the AI in Capital Markets Working Group. So we established this working group back in June 2024, and originally we were just looking for a group of experts to help run an education function we were looking to initiate within ICMA, looking at AI use in the capital markets. But what we didn't expect was the extent to which different members from various sectors of the industry were keen on joining a broader initiative to work more closely with regulators on this topic, but also to go into more detail on the market practice, the implementations, and the considerations that we're seeing across our workflows going forward. So as a result, we created the AI in Capital Markets Working Group, and now we have over 200 participants from 90 firms within ICMA, and that includes issuers, banks, law firms, market infrastructures, rating agencies, and so on. And it's also truly global. So we have representatives from across 6 continents. We have a large contingent from APAC as well as Europe, but also many that are based in other areas across the world too. Now, what have we been up to since we launched? We have been experiencing quite a core interest from the regulatory bodies and the legislative bodies. So there's a real back and forth of information sharing at the moment where those that are sort of guiding the industry forward are really interested to see and hear from those that are in the industry actively engaging with AI on a daily basis as to the real impact and real sort of workflow changes that are happening. So in 2024, we responded to our first consultation, which was a European Commission consultation on AI in the financial sector. And that was really to help guide the implementation of the EU AI Act. So to consider how it would really impact financial sector firms in particular after it was introduced. In 2025, we were very busy with the FCA. We responded to an FCA consultation on AI in UK financial services, as well as attending a roundtable on how the FCA can support AI in the UK market specifically. We also have worked quite closely with international organisations such as the OECD and IOSCO, responding to consultations for both and also engaging in that feedback loop with both organisations on the use of AI in the industry. And this year, we're going to launch a consultation response to a Financial Stability Board consultation for sound practices on responsible AI adoption in financial institutions. Now, you'll notice that some of these consultations are more broad than just capital markets, but the reality is that with AI, the impact is so far-reaching that we can tailor our responses and get our points across with the capital markets angle specifically, regardless of whether it's directed purely at the bond market or more broadly across financial services. Next slide, please. So one thing that we do within the AI working group is track the regulatory and legislative updates across the world. And we come back to this every quarter. We also write an AI regulatory update in our quarterly report, which is a article that we publish as ICMA, and we focus within the fintech section of that publication on AI regulatory updates as part of it as well. We also track these on our website, and like I say, come back to them in each of our quarterly meetings. A couple of points I just want to pick up on for your information that we've identified recently is the increasing impetus on cybersecurity, financial stability, and cyber threat risk. And that's as part of the sort of mythos AI conversation that's been coming out recently, and with sort of intense lobbying from governments to financial corporations. And you'll see it's sort of no surprise that the SFC and the HKMA have recently published circulars relating to AI cyber threats. We've also seen the Monetary Authority of Singapore publish a AI risk management toolkit. We've seen the FCA update their statements on frontier AI models and cyber resilience. And so it's really interesting that the financial regulatory bodies are taking this standpoint in terms of cyber resilience now in relation to AI. Another core emerging trend is the sovereignty of AI infrastructure. And that comes and impacts the capital markets in a twofold way. Firstly, funding for AI development, AI data centers, and infrastructure investment is an increasing topic that we are addressing within the AI working group. And secondly, it has quite an intense regulatory impact whereby firms that need to update their AI reporting systems are looking to sort of solidify and centralize how they are doing so, and to sort of renationalize their AI reporting systems as well. So we're keeping on top of these topics. In the EU, this comes into the EU Digital Omnibus, as well as a recently published EU Tech Sovereignty Package. But we're seeing these trends across the board as well, for example, in the US with their new national security emphasis as well. Next slide, please. And then the final place that we look in the working group on AI is the real impact in the bond market specifically. So where are AI use cases changing the game and how the bond market works? We look at this from pre-trade in primary markets all the way through to secondary markets and post-trade in both systems as well. A couple of the core use cases that we're seeing crop up across the board relate to sort of term sheet auto generation and also term sheet data extraction in pre-trade, and using that data from term sheets to carry throughout your sort of bond process and send that information automatically to the other market players that need to receive it. In secondary markets, we're looking a lot at the use of AI-driven algorithms. There's a large conversation around financial stability implications where AI-driven algorithms are used, and also really understanding what that means, as well as looking at liquidity models and using AI to seek out alternative pools of liquidity and identify alternative bonds in the market. And then in post-trade, there's a broader conversation around AI to reduce settlement fails and to predict settlement fails as well. So we're keeping track of all of these different use cases. One thing I would like to sort of impart on you that you can take away is that these are having a real impact, and we're seeing that now in the bond market, and the implications of AI are being felt and are coming to fruition. If you would like to join the AI working group, please let me know after this webinar. It's open to all, and we would love to have you there for your inputs as well. So next slide, please, Fiona. Thank you. As part of the other hat that I work on at ICMA, I'm also the secretariat to the Bond Data Taxonomy Working Group. So changing approach slightly here. The bond data taxonomy is a common machine-readable language, which we designed for debt issuances and debt securities across the whole life cycle. And really, the bond data taxonomy is designed to provide a standard for the communication of bond data. So it really acts as a sort of practice data standard to get straight through processing and that golden source of data across your bond workflows. It also was designed to apply for traditional finance and tokenized securities and the emerging DLT infrastructure as well in the bond market, even though it can be applied in many different ways and many different solutions across the life cycle. So, for example, we would see it through from issuance through to vendor players adopting it to receive bond data as well. Next slide, please, Fiona. Just quickly, a little bit of history on the bond data taxonomy. It was first released in March 2023. So it's been a market industry standard for some time now, and we've really seen adoption pick up after we developed the DLT extension in February 2024. Once again, it's open to all ICMA members. So that is to join the working group. So issuers, investors, banks, law firms, vendor firms, and they all have a role to play in helping guide the development and the releases and the things that we work on within the bond data taxonomy working group. Next slide, please. But when we talk about a data standard, it's quite difficult sometimes to comprehend it without seeing that visual element to it. So it really is an XML language, a machine-readable XML format. So we take the core bond information, for example, your security identifier, and what we've standardized is the way in which it's represented in XML format. So that can be sent and received by all bond market parties in the same way without having to remap your workflow or remap your system. And like I said, adoption has really picked up recently of the bond data taxonomy. Next slide, please, Fiona. And I will hand over to Gabriel now to highlight some of the key adoptions that are particularly relevant to those on this webinar.
Yes, thanks, Emma. So looking at adoption in particular, the bond data taxonomy has been implemented to date by a range of different market stakeholders, both for conventional debt securities as well as for DLT-based or digital bonds. And importantly, the first adoption by an issuer has been in Asia Pacific. So the government of Hong Kong was the first SSA issuer to adopt the BDT in its digital bond issuance of February 2024. So 2 years ago, a multi-currency issuance in different tranches. It was also the first for green bond. This was then followed by Hong Kong's issuance in November last year. Again, a multi-currency issuance, larger in size, around $1.2 billion equivalent in 4 tranches, which remains today the largest digital bond issuance to date. And this transaction also featured settlement in wholesale CBDC for 2 tranches. There have been other implementations, in particular for DLT-based bonds, as you can see here, and also one by SWIFT in their digital asset standards platform, which was announced at Cybos last year. But the bond data taxonomy has also been implemented for workflows of traditional debt securities, as shown here on the left-hand side. So there's been parallel developments, again, using the bond data taxonomy as a common denominator. Here we have examples by the World Bank Treasury. There's also a webinar that we did, and that's available on our website. And then in September last year, to highlight one initiative here, Euroclear and Clearstream issued a joint statement announcing the intention to digitize the Eurobond market in alignment with the BDT. So another significant announcement there. And since then, different implementations also by firms in Asia Pacific. There's further information available on these different implementations on our website. And there's, again, further implementations that are underway and which are going to be announced in due course. With that, I'll hand back to Emma.
Thank you, Gabriel. So just to let you all know that we recently published a new version of the BDT, an updated version 2.0, which expands on the number of fields within the BDT. So it now encompasses over 300 fields, and allows for more workflows within the bond market. So, for example, looking at multi-tranche issuances as well as your original plain vanilla bond, which it was originally designed for. And that is because of all of this recent feedback and adoption announcements that Gabriel just touched on as well. So if you would like to learn more about the BDT, you can access it on our website under resources and download pack. And there you will see a link to download the BDT. Like it says here, would download the ICMA BDT 2.0. If you have any questions, same with the AI working group as well, please let myself or Gabriel know. And if you would like to learn more about some of the relevant implementations, we'll be happy to share. So please do ask. And also you can put it in the Q&A at the end of this webinar as well. So with that, I will hand over to Georgina just to touch on one of the other standards we look after at ICMA.
Thank you, Emma. I'm actually going to let Gabriel cover the CDM, but just to touch very briefly on the fact that the bond data taxonomy and the common domain model are our two critical standards, aside from the DLT framework that we've been working on that Gabriel has mentioned in his previous section. But Gabriel, I'll hand to you to talk a little bit about the CDM, if that's okay.
Yes, of course. So another important initiative and a collaboration between different trade associations. So a collaboration with ISDA and ISLA. The CDM is open source and is hosted by the Fintech Open Source Foundation. And often the question is asked, what's the difference between the bond data taxonomy and the CDM? The CDM is essentially has been developed for different types of products, in particular focusing on derivatives, repo, and securities lending. So products that are more complex in nature. And the idea behind the CDM is not to have a digital representation only of the instrument or the transaction and the different steps, but to also to have this expressed in code. So that if you imagine a PDF guide that sets out how a transaction is designed to be executed and what actions happen, for example, in post-trade, the CDM covers all of this in code. If we move on to the next slide, to give you perhaps a more concrete kind of picture of what this means, the idea behind it being the CDM is sort of a common denominator, but also a data and process model that defines all the steps in a transaction that occur. So if you think about a repo transaction where margin is applied or where collateral is substituted, and the same applies to derivatives transactions, for example, where you have a floating rate and other different elements that need to be defined that can change over time. The CDM covers all of this. To date, the greatest implementation of the CDM has been for regulatory reporting. So using ISDA's digital regulatory reporting solution across different jurisdictions, including in Asia Pacific. So for swaps reporting in Singapore and other APAC jurisdictions, there's other in the pipeline, but equally in Europe and the US. At the same time, some firms have also implemented the CDM to automate different processes. For example, in the repo trading workflow from pre-trade to then trade execution and some of the post-trade actions. There's further information on the one hand on ICMA's website, but also importantly on the Finos website, where the CDM is hosted, where you can join the community, where you can see the different topics that are on the agenda. There's a forthcoming release as well, and further videos and supporting materials. And with that, I will now hand back to Armin Peter.
Thank you, Gabriel, and thanks, Emma. I think you both in particular set a very good scene for what we've done in primary market innovation or wanted to get across in the primary market innovation project, because we do understand that standards are certainly the foundation for all that we do to make sure that we remain interoperable in primary markets and across capital markets, more broadly speaking, and are not creating illiquid digital islands, so to say. So 18 months ago, we developed and started the primary market innovation project with the single purpose to look at and focus on the primary market innovation, ask our industry members actually what do they understand when we talk about primary market innovation. In the meantime, after 18 months in 2 phases, we have around 250 participants across 150 member firms. Phase number one was actually holding a lot of interviews, 50 plus stakeholder roundtables to really calibrate the language down to what we do understand and what we need in primary market to make sure we become more modernized and efficient going forward. That sets very nicely the scene around making sure that we are balancing the vision and the reality, that we know what we want. And it became very clear at the very start that in the very first place, we needed to focus on the workflow as it is right now to make sure that we actually are landing in this future world of digital issuance as we all think about. So first phase allowed us to balance vision and reality, making sure that we focus on the first steps around workflow. And it became very, very clear that the market wanted data standardization. And you heard already Emma talk and Gabriel talking about the BDT and the CDM, very important part. And phase one led to the fact as well that increasingly people understood the adoption of the requirement of standards in the very first place. We certainly had a massive increase in such as the World Bank has developed Shastra and Astra to illustrate the use of the BDT. We had the Euroclear, Clearstream, ICSDs adopting the BDT, and even the regulatory environment helped our push and work here at ICMA when we focus on primary market innovation project, not only about the US development, but here in Europe as well, where the ECB actually highlighted and urged the market to adopt standards like the bond data taxonomy going forward. Now, as we've done so, and you heard Emma talking about the release of the 2.0 just in April, we needed to think a step ahead. So on the next slide, we are going into phase number 2, where it was all about making sure, while the senior leaders have given us the mandate on what to focus on workflow, that we developed somewhat a common language and framework and a foundation for the industry to understand how to transition from the place where we are today to the world we like to get tomorrow, a modernized capital markets. And it's for that purpose that we had 3 working streams, one working on the workflow, i.e. the assessment of how the world today looks like, what can be done to make us more efficient going forward and get us on this transition journey to the world of tomorrow, i.e. the model change on the horizon. So the second working group was looking on the model change environment. What is so desirable to get to this new place? What are the opportunities across private market, digital market, and emerging market increasingly? How to get future ready for this? And it landed in a broader report carried by a third working group looking at the underpinning elements that are required to have a safe transition from the place of today to the more modernized capital market, primary market in the future. We are going to come out with a transition report written by practitioners across these 3 working groups in mid-July. We then will go into the next phase, to which we actually would invite you to participate going forward, as the report highlights practical next steps and things that need to be actually addressed going forward. So a report comes out in July, and then we are embarking on phase number 3, working groups, to which we will invite you going forward. And with that, I'm passing it back to the team.
Great, thanks, Armin. So, sustainable finance and fintech and digitalization is an important topic for us, and a joint initiative between our sustainable finance department on the one hand and our fintech and digitalization department. And there's a task force that we set up at the end of 2024. It's one that is jointly coordinated by Simone Utermark from our sustainable finance team and myself. And the key question really is how technology can support sustainable finance. And to that end, we have held a series of workshops. We started with green bonds tokenization and reporting with 3 use cases from the Asia-Pacific region, in particular to understand how tokenization or technology has been applied to further sustainability, so looking at digital green bond issuances, but also using DLT networks and blockchain for reporting purposes. We then looked at AI and large language models for sustainable bonds and ESG scoring in a second workshop. Earlier this year, we looked at sustainable finance platforms. So the Accept platform, which you may be familiar with, which is a tool designed by an entity in Asia Pacific. So it's sort of a long kind of, it's an acronym, but a long kind of long-winded term here. All countries common equivalence platform for taxonomies that you may be familiar with. The idea behind it is that you can navigate different taxonomies in different jurisdictions and understand to what extent the financing for projects meets different criteria in different regions. And then we also heard from the Blue Bond Accelerator, which is designed to specifically drive investment in sustainable and regenerative blue economies, which sits under the Green Bond principles. And then we are also planning to hold another webinar later this year. So this task force is open to all ICMA members. And if you'd like to join, please don't hesitate to get in touch. And there's going to be more to come as well in terms of publications on this topic later this year. And with that, back to Georgina.
Thank you very much, Gabriel. Well done keeping to time, everybody. We're doing an excellent job, so hopefully there will be time for Q&A. I know nobody's raised any questions yet, but please feel free to do so. It's perfectly possible to raise them in an anonymous manner if you wish. I'm just going to touch briefly on our events, education and resources point here. I think we have a duplicative slide from a resources perspective. Just to say also, I mentioned at the beginning that we're recording this and we will share the recording with everybody who registered to join, but also we will send out our slides with all of the relevant links embedded within them to anybody who wishes to know more or to read further on any of the topics that we have covered today. So please feel free to get in touch with either Alex, myself, or one of the team to ask for that. So just on member collaboration and events, I mentioned this at the beginning, our interaction directly with our members is a very critical part of the role that we play at ICMA. Although with 630 member firms and not the biggest staff, it's very difficult for us to do a lot of interpersonal or intercompany connections with everybody. So this is one of the reasons we attend and run many events, webinars like this one, etc., and a couple that the team have mentioned that are coming up, or indeed that have run before that you can listen to via recording. So just to give you an illustration, already this year we've had 14 different events and webinars that we've either run or put in place. The red ones are external events where we go to present and or moderate and or speak. The blue ones, or dark blue, are our own events that we run where there's either a fintech and digitalization focus or it is specifically an event about our topic, which I'll touch on a few of those. And then the green ones are webinars, etc., where we're sharing, or roundtables, where we're sharing further detailed information on the different topics that we've covered today. This we do all year, every year, so please keep an eye out for these as they come up. They will be advertised through our website, through our mailings, which you probably get many of from ICMA, but also through the newsletter that Emma mentioned. So the AGM was held in London this year for the first time in 58 years, between the 27th and the 29th of May. It was one of our most successful ever, actually, in terms of number of people attending. And we had some very important keynotes and panel discussions on our topic of fintech and digitalization. Obviously, the AGM covers our entire selection of work at ICMA, with our part being one of those. Later in the year, as mentioned by Alex at the beginning, very importantly, we will be holding, or we normally hold anyway, specific events in the Asia region. This year, we will have a full event in the margins of Singapore Fintech Festival. So please look out for notifications to register for that. And we will be running an invite-only roundtable and networking drinks in Hong Kong that we are working on. Again, please keep an eye out for that and sign up if you're available to attend. But we always try and do something in the margins of both the Hong Kong and Singapore Fintech festivals. The next event actually coming up specific to our area this year is on the 29th of September in London. This is our global annual Fintech Forum, and it's our flagship event for our topic. So again, all members and non-members are actually invited to join. Non-members are charged a small amount to attend, but members can join for free. So we'll leave it there. A couple of the team have mentioned the quarterly report. Please keep an eye out for this. It's a compendium of everything ICMA is working on, all the hot topics that may be of interest to you. We always have in there some thought leadership topics. Sometimes they cover fintech and digitalization topics, but there is always a whole section on our area in the quarterly report. So please keep an eye out for that. It is sent out, as it suggests in its name, once a quarter. Okay, Next slide, please. The other thing I wanted to mention was our training courses. We run a very wide spectrum of training at ICMA. It's something we're also very well known for, but we have 2 specific courses relating to the topic of fintech and digitalization. Mentioned here, Introduction to Digital Assets and Securities, so very much DLT, stablecoins, etc., that Gabriel and Francisco were talking about earlier, and also one on AI, specifically focused on debt capital markets. So please look into those. They're on the website, very easy to find. Some of them are run live stream, so you can do them from anywhere in the world. Occasionally, we have in-person classroom-based training. So please have a look at the website for more information on our training courses. Directories, newsletters, and other resources. So there's lots and lots of information that the team has referenced here about what is going on in the market. We track all activities, all relevant regulatory activities, all activities of DLT transactions where they are public, anything to do with regulation around DLT and AI that have been mentioned by the team. So the directories are very, very rich sources of information. We also have a directory of suppliers, so fintech suppliers who are supplying solutions to the debt capital markets industry. And again, not just members of ICMA, anyone who is working in that area can feature in our directory. So please have a look at those if they are of use to you. Emma's already mentioned the newsletter. This comes out monthly and we'll give you links to the latest news and activities on our part. I think we can skip the next slide because it's a little bit duplicative. Sorry. Thank you. If we just go to the Q&A slide, there are no questions that have been asked so far, but if anyone does want to raise a question, please feel free to post in the chat. Otherwise, as I mentioned at the beginning, we will be sending out the recording to all the people registered for the webinar, plus we can distribute the slides with all the links to anyone who would like to receive those. And without any questions that have been raised in the chat, if anyone on the team has anything further that they wish to say that they feel they didn't, no problem, Pippa, thank you. You will definitely get the slides, no problem. We will send those to you. If anyone has anything else to say from the team's perspective, please do. If there's anything you forgot to add, otherwise, I think we can probably wrap up. Great. These are the contacts. You've met most of the team today. Hopefully it was useful to hear from us. We will try and do further webinars specifically for the Asia community. But as I say, there are many global webinars that are diving into very important topics mentioned by some of the team today. So please keep an eye out for those. Alex is our contact in the region. He runs the network of around about 500, I think it is at the moment, Alex, individuals who've signed up to be part of this community. Some are members, some are not. Please look out for our events around the Singapore FinTech Festival and Hong Kong FinTech Week. And we look forward to connecting with you further. Thank you to the team for joining. Emma, you came off mute. Did you want to add something? No? Okay, good. Thank you, everybody. Thank you for dialing in. We hope you found it useful and informative, and we will see you soon. Thank you very much.